Welcome back to the Finance Hub. Today we're diving into the essentials of stock market investing for beginners. If you've ever felt overwhelmed by the sheer amount of information out there, don't worry, you're in the right place. Let's explore fundamental strategies and tips for making informed investment decisions. First things first, let's break down what the stock market actually is. The stock market is a platform where shares of publicly listed companies are bought and sold. When you buy a stock, you own a piece of that company. Stocks are traded on stock exchanges, like the New York Stock Exchange or NASDAQ. Companies issue stocks to raise capital for growth and expansion. Investors buy these stocks hoping the company will grow and the value of their shares will increase, allowing them to sell at a profit. Before you dive into investing, it's crucial to set clear financial goals. Are you investing for retirement, a major purchase, or simply to grow your wealth? Knowing your goals will help you choose the right investment strategy. Write down your financial goals and timeframes. This will guide your investment decisions and help you stay focused. Now, let's talk about fundamental analysis. This is the method of evaluating a stock by examining its financial statements, management, industry position, and economic factors. Key metrics to look at include earnings per share, or EPS, price-to-earnings ratio, also known as PE, and dividend yield. EPS indicates a company's profitability, PE ratio helps determine if a stock is over or undervalued, and dividend yield shows the return on investment through dividends. Transition to segment title, diversifying your portfolio. Diversification is a strategy to reduce risk by investing in a variety of assets. Instead of putting all your money into one stock, spread your investments across different sectors and asset classes. This way, if one investment performs poorly, others may perform well, balancing out your overall portfolio performance. Transition to segment title, investing for the long term. One of the most important tips for stock market success is to think long term. The stock market can be volatile in the short term, but historically, it has trended upwards over the long term. Stay patient and avoid the temptation to make impulsive decisions based on short-term market fluctuations. Transition to segment title, keeping emotions in check. Host. Investing can be emotional, but it's crucial to keep your emotions in check. Fear and greed can lead to poor decision-making. Host. Voiceover. Stick to your investment plan and avoid making decisions based on market noise or panic. Transition to segment title, continuing education and staying informed. Host. The stock market is constantly evolving, so it's essential to stay informed and continue learning. Read financial news, follow market trends, and consider taking courses on investing. Host. Voiceover. Knowledge is power, and the more you know, the better equipped you'll be to make informed investment decisions. Transition to segment title, seeking professional advice. Host. Finally, don't hesitate to seek professional advice. Financial advisors can provide valuable insights and help you create a personalized investment strategy. Host. Voiceover. Choose an advisor who understands your financial goals and can guide you through the complexities of investing. Closing scene. Host. To sum up, successful investing requires understanding the stock market, setting clear goals, analyzing fundamentals, diversifying your portfolio, thinking long-term, keeping emotions in check, staying informed, and seeking professional advice. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more tips on smart investing. Until next time, happy investing. Music fades out.